You know, when Warren Buffett makes a move, pretty much the entire financial world stops to watch. But his latest play, this huge investment in Occidental Petroleum, well, it's not just another trade. It's a massive statement about the future of energy. So what's he really trying to say? Let's break it down. And this quote right here, it just nails it. This isn't Buffett just dipping a toe in the water or balancing a portfolio. No, this is a deliberate, high-stakes bet. It's built on a deep, fundamental belief about where the energy sector is headed. This is what conviction looks like when you've got billions of dollars to back it up. 31%. I mean, just let that sink in for a second. Berkshire Hathaway now owns almost a third of Occidental Petroleum. For a company as massive as Berkshire to take a position this big, this concentrated in one single company, that's not just a signal to the market, that's a foghorn. So our job here is to decode that message. We're going to unpack the strategy, the thinking behind it, and what the end game might be for one of the most important energy investments we've seen in a long, long time. And to do that, we got to start with the facts. So what exactly went down? Well, the whole story really plays out in a handful of recent SEC filings. And if you read them, you can see this steady, methodical buildup of Berkshire's stake in Occidental. Basically, Berkshire has just been quietly, systematically buying up millions and millions of shares on the open market. But the really critical part here is the result. They've now crossed that 30% threshold. And that's a huge deal. That's the level where an investor goes from just having a stake to having real structural influence over a company's direction. And get this, it doesn't even stop there. 30% is not the ceiling. Berkshire already has the green light from regulators to buy up to half the entire company. So this suggests their current position is just another step on a much longer road. Which of course brings us to the billion-dollar question. Why this company? And why are they doing it now? Well, this isn't about chasing some hot stock tip. This is what you'd call a thematic allocation. It's an investment that's based on a really big long-term belief about where the economy is going. So Berkshire is really betting on three core ideas here. First, they believe that global demand for oil is going to stay strong for a long time to come. Second, they're confident that U.S. producers are finally getting more disciplined, which should lead to more stable prices. And third, they see something special in Occidental itself. Not just its oil fields, but its cutting-edge strategy in carbon capture, a technology that could be absolutely vital for energy's future. But you have to ask yourself, is this really just about oil prices and new tech? Or is there a deeper, more complex strategy at work? Come on, this is Warren Buffett we're talking about. You can bet there are layers to this. All right, so let's pull back the curtain and take a look at the playbook. Because this investment in Occidental, it's not a single bet. It's actually a really sophisticated three-layer strategy that's designed to hit a bunch of different goals all at once. And here are those three layers. First, Occidental is an absolute cash flow machine. It provides a steady, predictable income stream. Second, owning a huge oil producer is a classic textbook hedge against inflation. And third, and this might be the most crucial part, by slowly cranking up their ownership, they're keeping the door wide open for a full-blown acquisition. And if you look at history, once Buffett gets to this point with a company, he almost never backs down. Okay, now let's zoom out even further. Because this move isn't just about Berkshire's strategy. It tells you something really fundamental about a different philosophy of investing, one that thinks in terms of decades, not quarterly reports. And this table just lays it out so clearly. It's a tale of two completely different worlds. On one side, you have your typical institutional funds. They diversify everything, they rebalance constantly. But on the other side, you have what's called dynastic capital, and that's investors like Buffett. They make these super concentrated bets based on absolute conviction. They love real, hard assets you can touch. And for them, the ultimate goal isn't just getting market exposure, it's getting control. So what is the end game here? You really have to remember, Warren Buffett isn't just making small, symbolic moves anymore. He's making massive, structural changes that are designed to shape Berkshire Hathaway's future for generations. The market has definitely gotten the message. The pattern of buying, the regulatory approval, the entire philosophy behind it, everything points in one direction. So the debate about whether Berkshire will buy more, that's over. The only real question left, the one every investor should be thinking about, is this: how much more? Is he going to stop at 40%, 49%? Or are we just watching the slow, methodical march towards a full takeover that will completely reshape a huge corner of the American energy industry? We're all just going to have to wait and see.